All right, let's get right into it. Today, we're going to pull back the curtain on something that feels like the market's hidden rhythm. We're talking about a framework that can help you see the structure behind all the noise, a concept known as quarterly theory.
So, have you ever had that feeling, where you're just constantly one step behind the market? You're always reacting to a move that just happened instead of getting in front of it. Look, the biggest challenge for pretty much every trader is figuring out when something is likely to happen. It's the difference between catching a massive trend and, well, being caught by it. Now, a lot of us are familiar with the power of three framework. And it's great. It's really useful for looking back at a chart and explaining what happened. The accumulation, manipulation, and distribution. But here's the thing. It's mostly looking in the rearview mirror. Quarterly theory is like the next evolution of that idea. It's not just about explaining the past, it's designed to help you anticipate the future with way more precision. So here's the game plan for this explainer. We'll start with the market's secret clock, then get into this wild idea that time is fractal. After that, we'll cover the super important stuff, like aligning your timeframes and understanding the AMDX profile. Then we'll tackle the big question, reversal or continuation. And we'll wrap it all up with what it really takes to make this work. Okay, here we go. This is the core concept. And honestly, it's a bit of a mind bender at first. The idea is that time, when you're looking at the market, isn't just this linear straight line. It's fractal. That means it repeats the exact same basic pattern over and over at every single scale, from an entire year right down to a single trading session. So what is quarterly theory, really? Well, at its heart, it's just a framework. It takes any chunk of time you're looking at and chops it up into four equal parts. We just call them Q1, Q2, Q3, and Q4. When you start viewing the market through this four-part lens, you'll begin to see these repeating patterns or profiles that give you clues about what might be coming next. And check this out. This slide just lays it out perfectly. A year? That breaks down into four three-month quarters. A month breaks down into 4 weeks. A trading week? You can view that as 4 key days. And a single day splits into 4 6-hour quarters. You can even take one of those quarters and break it down again into 4 90-minute cycles. See? It's the same 4-part structure, repeating over and over, no matter how much you zoom in or out. Okay, so the theory makes sense, right? But to actually use it, your setup is everything. I mean, aligning your chart's time frame to the specific cycle you want to analyze, it's not just important, it's absolutely crucial. If you don't get this part right, you'll just be looking at a bunch of noise. Let's dig into how it works. All right, this slide right here, this is your practical cheat sheet. Seriously, you might want to take a screenshot of this one because this is probably one of the most important takeaways you'll get. If you want to analyze the daily cycle, you have to be on the 15-minute chart. Looking at the weekly cycle? Pull up the 1-hour chart. If you mismatch these, the beautiful structure we've been talking about just disappears. It becomes a mess. And just a few quick tips for getting your chart set up. Look, don't try to draw these quarters manually with a Gann box or something. It's just a recipe for disaster. Just find a dedicated quarterly theory indicator. There are plenty of them out there. And make sure you go into the settings and enable historic cycles so you can go back and study past examples. Oh, and don't go crazy with the colors. The defaults are usually there for a reason. Keep it clean. So our charts are set up, we're on the right time frame. What are we actually looking for inside these quarters? Well, we're looking for a story, a narrative that plays out over and over and over again. And we call this the AMNDX profile. This story almost always starts the same way. First, you get A for accumulation, where the price is just chopping around, coiling up in a range. Then comes M for manipulation. This is your classic fake out, right? A false move designed to trap traders and grab liquidity. After that, we get D for distribution. And this is the big one, the real powerful move of the cycle. And finally, it all wraps up with X, the X factor, which tells us if the cycle is going to reverse or just keep on going. And that really brings us to the million-dollar question. Accumulation, manipulation, distribution. They tell us the story of what has happened. But that X factor, that final quarter, that's the part we really want to get ahead of. Is price going to turn on a dime in reverse, or is it going to continue the trend? So how do we solve for X? How can we possibly know which way the market's going to go in that final quarter? Well, the answer isn't some magic trick. It all comes down to understanding the market's ultimate objective for that particular cycle. And that objective, we call it the draw on liquidity. Think of it like the market's destination on a GPS. It's some significant price level on a higher time frame, maybe a big swing high or a pool of orders sitting below an old low that price is actively trying to get to. It's like a magnet pulling the market in a very specific direction. So here's the absolute key. If, during that big distribution move, the market actually reaches its draw on liquidity before Q4 even starts, well, its job is done. The objective has been met. In that case, Q4 is very likely to be a reversal. But if that distribution phase fizzles out and the target hasn't been reached, the market's mission isn't over yet. It's still got business to take care of, and so Q4 becomes a continuation of the trend to go and finish the job. Simple as that. Now, it's really easy to hear all this and think, okay, cool, I'll just memorize the AMDX pattern. But the real skill here, the thing that separates the pros, goes so much deeper than just spotting a pattern on a chart. And this right here is the most important thing to get. Quarterly theory isn't some rigid mechanical system that you can just follow blindly and print money. It's not a robot. It's a lens. It's a completely new way of looking at your charts that helps you organize the chaos and observe what the market is really doing with more clarity. So how do you get good with this new lens? First, always put context over the pattern itself. What's the bigger picture? What's the order flow on the higher time frame? Second, you have to be at the screens. Daily observation is mandatory. This is a skill you build through screen time, not by cramming over a weekend. Pay super close attention to how price reacts at those key liquidity levels. And here's a big one. Aim to trade the distribution. That's the confirmed real move, not the manipulation, which is designed to trick you. And finally, you've got to journal everything. Your notes and observations are what will build real, lasting skill. So there you have it. We've uncovered the market's internal clockwork, that four-part rhythm that's always beating just beneath the surface. You've got the framework, you've got the setup, and you've got the narrative. So the real question is, are you ready to stop just watching the market and actually start learning the steps to its dance?